Good morning, everybody. Welcome to this section of revision class again. And the discussion will be centered around cost volume profits analysis. Cost volume profits analysis. And this cost volume profit analysis is an important tool that an organization can use to make decision in terms of price, in terms of the quantity of commodity to produce, in terms of the cost of a product, in terms of fixed cost. Organization can use cost volume profit analysis to determine at what point will they break even. And when we talk about break even point, is the point where you neither make profit nor loss, where an organization neither make profit nor loss. So the issue of cost volume profit analysis is a management accounting tool used to study the relationship between costs, sales, volume, and also profit. So what it does is that it helps managers to understand how changes in selling prices, costs, and production levels affect a firm's profitability. So in simple terms, the cost volume profit analysis will answer the questions such as how many units must an organization sell to break even? And what sales volume is needed to achieve a target profit? And how will a change in cost or price affect profit? So this is what cost volume profit analysis try to address. So when we talk about fixed costs, is what we all know. Fixed costs, these are costs that does not change with the level of output, but variable costs are costs that change directly with production or sales volume. An example, we have labor, direct labor, we have materials, and so on and so forth. And when we talk about volume, volume is referring to what level of output or sales. And when you talk about profit, profit is what? Profit is the difference between what? Total revenue and what? Total cost. I'm just trying to make this analysis, say all this so that you have a clear view of what this is all about. So profit is total revenue less total cost. So in break-even analysis, there can be an equation. You know, I think in the normal classes, I just only shows the formula. I will also show the formula, the various formulas. But in break-even analysis, let me ask this question. Since this is revision class, if this is, let me express an equation. We said profit is what?
Total revenue minus total cost.
That is total revenue. Total revenue minus total total cost. So where your profit is zero, that is, let's say your total revenue is 20 and your total cost is 20. What has happened at this point?
Break even.
Break even. Take note. Take note. It's break even because at break even point, you neither make profit nor loss. So you can have a question in this line likewise, whereby, sometimes one thing I discover is break even question, you can solve in different ways, depending on how you can interpret the question, but you arrive at same answer. So in some questions, you might need to apply this concept, whereby you have your total revenue, you have your total cost, using what problem to try to derive your quantity. Yes, to try to derive your quantity. So take note that profit is total revenue minus total cost. And where your total revenue is equal to total cost, it means you have a break even. You have break even. Now, in talking about cost volume profit analysis, this word contribution is a recurring decimal. The concept of contribution is what? What is contribution? No, this is revision class. You'll be leading me through.
Revenue, sales unit, less variable costs.
Yes, contribution is selling price less variable cost. If it is in units, in total, it can be total revenue less total cost. So we have contribution margin. So the portion of sales revenue that contributes to covering fixed cost and revenue is contribution. So take note, most students oftentimes confuse contribution margin with contribution margin ratio. They are two different things. Now, what is their difference? What is their difference? Contribution margin and contribution margin ratio. What is the difference?
Contribution margin is in units. Contribution margin ratio is in value.
Okay. Yes, can I get another school of thoughts?
Contribution margin is contribution in unit per unit divided by sales. And contribution is sales minus variable cost.
Okay. All right. I still need more response to that. Difference between contribution margin and contribution margin ratio. Contribution margin is your selling price per unit less variable cost per unit. You can get contribution margin per unit, and for you to get that, it is selling price per unit less what? Variable cost per unit. Now you can get total contribution margin. When you're talking about total contribution margin, you're talking about what? Total sales less what? Total variable cost. Total sales less total variable cost. Now, this ratio we are talking about, contribution margin ratio, CMR, contribution margin ratio, it is what? Contribution margin divided by what? Sales. Contribution margin ratio, it means there is a relationship between two things. And what is that relationship? Contribution margin and sales. So it means your contribution margin ratio, you must first get your contribution, then divide by what? By sales. Divide by sales. Let's see if we have it in our slide. Yes, you can see it. Contribution margin ratio. This is the ratio, your total contribution margin. That is your sales minus variable cost. Divide by what? Your sales. While contribution margin is just sales revenue less to total variable cost, where you're talking about the total. But in units, it is just sales minus variable cost. Please, hope this is clear.
Yes, sir.
So contribution margin is just selling price less variable cost. While contribution margin ratio is your contribution margin divided by what? Sales multiplied by 100. So we must understand this. We must understand this in case you don't know that before. So, talking about break-even point. What is the formula for break-even point? Break-even point. The formula for break-even point. is what?
Cost over selling price minus fixed cost.
Of okay.
Fixed cost all over selling price per unit minus variable cost per unit.
Okay. Yes, that is
want
it.
even point in
So
units.
divide by contribution.
Total cost all over divide by contribution.
Mark, can you come again?
If we want to get the break-even point in units, is
Yes.
total cost
Fixed
all over
cost.
contribution per unit.
What kind of
What?
cost? What kind of
Fixed
cost?
cost.
I say
Fixed.
total fixed cost.
Okay, total fixed cost. Your network is breaking. Right.
To get in value, it is total fixed cost divided by contribution margin ratio.
Yes.
And one of
Yeah.
the difference between contribution margin ratio from your explanation, one is and contribution margin, one is in value, the other one is in percentage.
Yes. Yes. So that is it. So break-even point. This is the point where total revenue equals total cost. That is a point where there is no profit and there is no loss. And you can be asking a question to determine break-even point in units. And for you to do that, it is your fixed cost divided by what? Contribution per unit. And if you are asked to determine break-even point in sales, it is your fixed cost divided by what? Contribution margin ratio. But in some questions, where you are giving selling price per unit, and you've already determined your break-even point in units, and you are asked to determine break-even point in sales value, it's just for you to use your selling price and multiply it by the break-even point in units. You get the total break-even point in value. So also, in break-even point, you can be asked to determine target profit. Target profits. Target profits. Let's see. We have that here. Yes. A question can require you to determine break-even point. Break-even points using or the level of sales required to achieve a target profit. Yes, the level of sales required to achieve a target profit. And when the question is demanding that from you, this formula you can see that what sales level do you need to achieve a target profit? Simply you use this formula. Fixed cost plus what? Profit before tax. The tax element will be given, the profit before tax will be given, divided by what? Your contribution per unit. Your contribution per unit, where you are trying to determine the target sales in units. The target sales in units. And we are trying to determine the target sales in terms of, like, I'm just trying to get the noise, where the noise is coming from whose end. Okay, and the merits from your side. So you can be asked to determine the level of sales in units required to achieve a predetermined what? Profit before tax. And when you're asked to do that, it is your fixed cost plus your predetermined profit before tax divided by contribution per unit. And you can also be asked to determine the sales volume, not in unit now, but overall sales volume required to achieve a predetermined profit after tax. And when you are expected to do that, this is after tax now. The formula is what? Fixed cost plus profit after tax, not before tax now. profit after tax divided by 1 minus tax rate divided by contribution per unit, where you are asked to do that in a question. So this is just a way of revising some of the things we've learned over time. Still under that, you can be asked to determine issue of margin of safety. Margin of safety. What is margin of safety? Margin of safety. Margin of safety.
Margin of safety is the difference between budgeted sales and break-even.
Yes. It is that point whereby when you go below it, you'll be experiencing a loss. So it is a point showing you a signal that at this point, you need to re-strategize. That if your selling price should be less than this, there might be issue. So this margin of safety, it measures how much actual or expected sales can fall before the business reaches its break-even point. So the margin of safety, what it does is that it's a cushion between your actual sales and break-even sales. So it shows how safe or risky a business is. So the higher the margin of safety, the lower the risk of incurring a loss. So depending on the question, you can determine your margin of safety by saying actual sales less break-even sales. We are going to see that in the question, one of the questions I forwarded on the platform. So that is in unit. And also you can determine margin of safety by saying actual sales less break-even sales in revenue. If you want to look at that in form of revenue, Now looking at this question, can you just solve this before we go into serious question that I've sent on the platform? That product X has a variable cost of $2 per unit and a selling price of $6 per unit. The fixed costs are what? $1,000 per year. If the budgeted sales and production are 300 units, what is the budgeted profit or loss for the year? So, can we solve?
Break even in points. Break even. That question 1. 2,500. Sorry,
Okay.
B. Sorry, B. What is the break even point in unit? 2,500.
What is the break-even point in units? So you said it's 2.5, sir. Anybody solving? Any other person having 2.5?
$250.
Okay, 250. Yes. Who else is having 25, 250?
No, it's 250. 1,000 divided by 4. Selling price minus variable cost is 4.
sir.
Yeah,
250,
250.
sir.
1,000 fixed by 4 is 250.
Okay, 250.
Yeah, 1,000 by 4.
250. What is the break-even point in units? 250. All right, but the first one, if the budgeted sales and production are 300 units, what is the budgeted profit or loss for the year?
I jumped that one. I was trying to multiply
I got
6.
11,000 budgeted profit for 11,000.
Budgeted profit.
$11,000. Yes, as a profit.
Okay. How do you do that, man?
So I got the sales. I multiply 3,000 units by the selling price. So that's 3,000 multiplied by 6. That was 18,000. But the variable cost. The variable cost 3,000 multiplied by $2. That's 6,000. We got that to get 12,000. And the fixed cost is given already as $1,000 per year to give 11,000 budgeted profits.
Okay. So look at it this way, man.
About 200, sir.
Okay, 200. Okay. How did you get 200 now?
The unit is 300 units
Okay.
multiplied by selling price of $6. We now have $1,800.
Okay.
We deduct our variable cost is 2 naira.
Okay.
We multiply the variable cost by the production unit, 300.
Okay.
2 multiplied by 3 is 600.
Okay.
If we minus 600, that is the variable cost from the revenue,
Yes.
we'll get a contribution of $1,200.
Okay.
We now deduct our fixed cost of 1,000. Now get $200 as the total
That's
profit.
correct.
So who else is
That's
getting?
what I got. It's
Yes,
200.
I use 3,000 instead of
I
300.
got 200.
I use 3,000 units instead of 300 units.
So
I was
200
wondering
is
where the 300, the 3,000 was
200 is
coming from.
correct.
200.
So it's 200. So that is good. You have to understand it. You just understand the concept. So when we go to the question I forwarded to the platform, I will want some of us to explain, because you need that grace to be able to analyze those questions. You need it. So I want to see how you can explain and bring out your variables. Yes, it's not about, yes, you can read everything, but once you don't know how to do certain things, it's also is not good. So you must be able to analyze. So what is the break-even revenue now?
Sorry, sir, I'm not getting
It's
that.
1,500.
Okay, 1,500. Okay, fine. I'm coming. So you say you're not getting something?
Yeah, that's A.
That A, yes, for you to get your profits,
Yeah,
it is
I times 6 multiplied by 300, 1,800.
Yeah, it's 4 that you use and times it.
contribution.
Okay.
Billing
Total
minus
contribution times 300 is 1,200. That's the fixed cost of 1,000.
Okay. Okay, I went and used the selling price they give.
So from our studies, for you to get profit, when you have contribution, it is contribution minus what? Fixed cost.
Fixed cost, yeah.
So in terms of the overall sales, The contribution is what? Per unit, 6 minus 2, you have 4. 4 multiplied by 3, you have 1, 2. 1, 2 minus fixed cost of 1,000, you have $200. You have $200. Is that clear, sir?
Yeah, it's clear. I want to use that selling price 6 naira direct to multiply 3,300 units without getting contribution first.
All right, sir.
Yeah, okay, thank you.
So the next one, somebody said the break-even revenue is somebody said is 1.5.
Yes,
Who is in
correct,
agreement
sir.
with that?
Yes, sir.
Yeah.
So
I
it's
got
correct.
1.5.
All right, 1.5, fine. So how many units need to be sold?
1515, sir.
1.5 again for D.
No, I think it's
325.
1515.
325 units.
Okay, so for D now, how many units?
325 units.
25 units.
All right, 325 units. This is fine. So who is not getting 325? Who is not getting 325?
It's 325. You gave the formula. It's 325.
325, good. That is introduction. That is just to refresh our memory. So let's now go to the question. The second question I forwarded on the platform. Let's see, it's an ICANN question. Most of you might have attempted it before now. Let me present something else. So this is the question 5. So can somebody read? As you read, don't just read. You read with understanding. So as the person is reading, every other person, you read likewise. Try and make meaning from what is on the screen. So somebody should read.
Color Effects Limited retails 2 products, common and executive traveling bags. The budgeted income statement year 2015 are as follows: common bags, executive bags, and the total. Units sold for common bags, we have 300,000 units. For executive, we have 100,000 units, and total is 400,000 units. Revenue at 200 naira and 300 naira per unit. And for common, our revenue is 60 million. For executive, 30 million, total 90 million. Variable cost at 140 and 180. The total for common is 42 million. For executive is 18 million, and our total is 60 million. Contribution margin at 40 naira and 120 per unit. For common bag, we have 18 million. For executive, we have 12 million. And for total, we have 30 million. Fixed cost is 12 million naira. Operating cost is 18 million. Required, as will be required that day. Calculate the break even in units, assuming that the planned revenue mix is maintained. B, determine the break-even point in units if only common bags are sold and if only executive bags are sold. C. Calculate the budgeted operating profits and break-even point if 200,000 units are sold, but only 20,000 are executive bags. I'm in class.
All right, thank you, ma. So, who can interpret this question step by step? That's the question is calculate break-even units, assuming that the plan revenue mix is maintained. So, let's assume this is what you are seeing that day. So, how will you go about it? The floor is open.
Our break-even in units will be total fixed cost all over contribution per unit. For the total fixed cost, we have it as 12 million naira, sir.
Okay,
Then the
ma'am.
contribution per unit, I'm picking that of the total now.
Okay.
The contribution per unit, I'm picking 30 million, sir.
Okay.
And if we divide it, sorry, please. No, I picked the wrong figure, sir.
All right.
I picked contribution margin. We're supposed to get contribution, which is revenue minus variable costs. Then whatever we get will now be what we divide. And our revenue, the total is 30. The total revenue is 90 million. Variable is 60 million.
Okay. Okay. Anybody wants to try again?
No, I was thinking that she was getting it. That contribution margin, is it not the actual listing? Because the units sold have been given revenue, that variable cost have been deducted from the revenue to get 18 million for common bag, 12 million for executive, and 30 million for total. I thought the contribution have been calculated. And you told us that we can have total contribution, so you can have total fixed cost and total revenue. So we use that total revenue. Sorry, I will use that total fixed cost, which is 12 million, to divide the total contribution, 30 million. If I want to do it for common bag or executive, I use that 12 million to divide 18 million for common bag, and use that 12 million to divide 12 million for executive. That's my little contribution.
Okay, all right. Thank you, sir. All right. Okay. Now, when you look at this question, you can see that they are giving you values, revenue at 200 naira and 300 naira per unit. It means for you to sell one common bag, how much will you sell? At 200, right?
Yes, sir.
One executive bag at 300 per unit.
Yes.
We get 60 million and 30 million, sir.
Yeah.
Yeah, so overall, total for common bag will be what? 200 multiplied by what? 300. You see 60 million, right?
Yes.
300 multiplied by 100,000. You have what?
30 million.
30 million. So when you add these two, you have this. You have 90 million. So variable cost per unit for one. For common bag, 140 multiplied by 300. You have what?
42 million.
42. 180 multiplied by 100. You have what? 18 million. So when you add this, you have this 60 million. Now, if you look at this question, the fixed cost is a joint cost for both products. Common bag is not having its own fixed cost. Executive bag is not having its own fixed cost, but they have a joint fixed cost common to both. And the value is what?
12 million.
12 million.
The value is 12 million. So the total cost here, the value is 12 million. So your revenue minus variable cost overall in total now, that is 90 million less 60 million. We give you what?
30 million.
30 million.
You can get it per unit too. That is for common bags, 200 minus 140 is what? 60. And 300 less 180 is what? 120 is 120. So your fixed cost is a joint common to both, and your contribution less fixed cost we give you what? We give you what? Profit.
Profit.
Fine. The question is now asking us, calculate the break-even units, assuming that the planned revenue mix is maintained. Break-even units. You can do this in two ways. You can do this, solve this in two ways. First, you can solve it this way. Let me show you this slide. Let's go back to the working slide. Let's look at this formula. You can solve it in two ways. When you are giving sales value, you want to get break even in sales. The formula is what? This is the formula. Fixed cost divided by what? Contribution margin ratio. Contribution margin ratio. Now, based on this question, sales means total, overall. So sales is overall. Look at that question you have. Your total contribution is what?
30 million, sir.
Fine, 30 million. That is your total contribution. Now, contribution margin ratio means what? Contribution margin ratio means what?
Contribution versus revenue.
Very good. Very good. Contribution divided by sales. Contribution divided by sales. Now, for you to get contribution margin ratio, referring to the question you have, if your contribution is 30 million, what is your total sales?
90 million.
19.
Very good. So to get your contribution margin ratio, what will you do?
30 million divided by
30
90.
divided by 90.
We have
Fine.
0.
And what will you? 0 point what?
33.
3.
I think it's still infinity, right?
Yes, sir.
Yes.
Yes, till infinity. Is the weekend class is with our children. So you have 0.33333 till
Unity.
infinity. Fine. So now for you to get the break-even point in value in cells, your fixed cost in the question is what?
12 million.
So
12 million, sir.
12 million. So 12 million divided by that, your 0.333. You have what?
36,363.
36.
633.
36 million.
350.
36,000. Sorry.
36 million.
36 million.
Okay.
Approximately 36 million.
Okay, 36
36.
million. Fine.
Yes, sir.
So that is your break-even point in cells, isn't it? Your break-even
sir.
point in cells. But the question is telling you, determine break-even point in what?
In
Unit.
unit.
In units. Now, this break-even point that you derive, that is 36 million, you know, is a combined break-even point for common bag and what? An executive bag.
Executive bag.
So what is the fraction of that of common bag in this break-even in cells?
It will be 300 divided by 400.
The fraction of common bag before executive bag. The fraction of common bag.
It will be 3:1. 3/4.
Okay. The fraction of
For common bag, 3/4. For executive, 1/4.
how did we get that?
Their total is 400. The ratio, I did ratio.
Okay.
Yes, sir.
That is trying to get the unit, right?
Yes, sir. The ratio is 3:1. 3:4. Sorry, 3 no. The ratio for common bag and executive is 3:1. And the total is 400. For common, it will now be 3/4. For executive is 1/4.
Okay. 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 All right. So your break-even point in cells is what? 36 million, right? 36 million, isn't it?
Yes, sir.
Yes, sir.
What is the fraction of common bag in that break-even cells, in that overall cells? Break-even cells. It will be this 60 here. 60 divided by the total. 60 divided by 90, right? 60 divided by 90 multiplied by what? Multiplied by 36 million. Yes, Madam Merit, where are you lost?
From the beginning.
From the beginning. I don't worry, we'll show the workings. I just want to do the analysis before we show the workings. I just want
Why is it 60 divided by 90?
Okay.
the contribution. The contribution you have, the break-even point you have, is in general for cells, for the whole cells. 36 million is the break-even point for both common bags and what? An executive bag. You know, you use the total to determine the break-even point in cells. So in that 36 million, what is the portion of common bag? In that 36 million, what is the portion of executive bag? It will be for common bag. It will be 60 divided by 90 multiplied by 36 million. You get the fraction of common bag, the break-even point for common bag. For executive bag, it will be 30 divided by 90. You get multiplied by 36 million. You get the break-even point in sales now. For what? For executive bag.
Sir, sorry, sir. This is relating to
24 million.
break-even point in value, right?
Yes, no, we are yet to get the unit. We are still coming.
Okay.
We are still coming. We're not yet getting, we are still moving. Yes, it's still in value. We are just still moving, yes. Yes. So the point is, if you can analyze that, if you can do the splitting that way, right. If you can do that splitting that way, then fine. Now, for common bags, the fraction of break-even points for common bag in sales, when you do 60 divided by 90 multiplied by 36 million, you're going to have what?
12 million.
No.
12 million.
60 million divided by 90 million multiplied by 36 million. You're going to
24
have
24,000.
million.
24,000.
24 million, yeah. No,
24 million.
24,000.
24,000.
24,000.
$60 million divided by 90 million multiplied by 36 million.
24,000.
23,999,000.
No million. You are dividing by 36,000.
Eh?
You are trying to divide the 36,000
24,000.
we got.
Is in
Okay.
million.
Is in million, is not in thousand.
It's a million.
The break-even point in value we got was 36,000 naira.
360.
It's 36 million. You can confirm again. You can confirm again, my 36 million. So if the break-even point in sales for common bag is 60 million divided by 90 million multiplied by 36 million, you should have 24 million.
24 million.
24 million.
So the question is, how much are you selling one unit of common bag? How much are you selling one unit of common bag?
We'll divide 24 million by 300,000 units.
200.
80.
We'll divide 24 million. If you are able to get 24 million, how many units is giving you 24 million?
300 units.
300.
300,000.
No.
How much are you selling one unit of common bag?
200. 200.
200.
Units of common bag is 300.
120,000.
Mr. Tope,
Executive is 300. White
It is
common is 200.
Look at the question now. This is it. 200 naira for common bags, 300 naira for executive bag.
oh, okay.
So if you have, I'm going to show the workings though, but before we show the working, you must understand this, what we are doing. The 24 million is break-even point in sales just for common bags. If you want to know how many units will give you 24 million, what will you do? If you are selling one unit of common bag for 200 naira,
Divide it with
Divide
By
by
the
200.
price.
Yes. Yes, you divide 24 million by 200. You have what?
120,000.
120,000 what?
units.
Units.
Okay, yes.
Units.
Oh, good.
Don't worry. This
Now,
process
wow.
is to make the D-Day very easy. That is why I want us to do it this way. Is to make the D-Day very easy for you. Yes.
No, it's you.
It might look as if it's but I just want us to understand it this way. You understand? So I will not even show the other approach, because that one self will now become something. So the point is this: if so it's not easy. For executive bag, what is the portion of executive bag in the overall break-even sales? What is the portion of executive bag in the overall break-even sales? In that 36 million, what is the portion of executive bag?
12 million.
Okay, fine. 12 million. That is 30 million divided by what? 90 million.
90.
Multiply by what? 36.
36 million.
Sir, but that 36 is not 36 million round though.
You approximate to be 36, man. If you use the whole value, you get 36 perfectly. But if you reduce to 0.33, you will get some approximation.
Hello, sir.
I'm with you, sir.
Yeah. That 36 million is 30 million divided by 90 million.
You have 0.33333.
Yes, you didn't multiply it by 100. I thought contribution margin should be multiplied by 100 over 1.
No, sir. It's just the ratio. Contribution divided by sales. Contribution divided by sales.
Okay. It means but my formula I have over a long time, that is my contribution margin ratio is equal to contribution all over sales revenue. That's 100 over 1.
Okay, when you do that, sir, what will you have?
33.3333.
Once you multiply that percentage by anything, it will still come back to this result. Because the 33% is still carrying 100.
Okay.
So you still divide anything you have by 100.
Okay.
So I have a question to ask. So this break-even point in units,
yes,
don't we apply the formula for break-even point in units to get the same value?
Very good. I don't know why they are rigmaroling.
So the formula for break-even point in units. So your contribution, for you to get your contribution, okay, yeah, let's do that now. Fixed cost is what? Fixed cost is what?
12 million.
12 million.
12 million.
So what is your contribution?
Total 30 million.
30 million.
And when you do that, your result is what?
$0.4.
0.4.
Your result is what?
0.4.
0.4.
0.4. Fine. 0.4.
morning. Good morning.
So that's 0.4 now. In relation to your units, you have what? In relation to common bag, you have what?
300 units.
300.
0.4 multiplied by 300 units.
We have 120 units.
Fine. So 0.4 multiplied by 100, you have what?
40,000.
40,000 units.
Fine.
Okay, I'm sharing my screen.
Is that one clear?
Yes, this is clear. That one is clear.
So that's 0.4. In the exam, you know that 0.4 is in fragments, is not as a whole. You understand? The break-even point, that's 0.4. You still go back to relate it with what? With the units sold. With the units sold. But the point is, let's complete that pattern we are solving. Let's complete it so that you get something. What we've done is correct. That simple one you just understand is correct. But let's complete this one. For executive bag, the break-even point is what? In terms of sales, 30 million divided by what? 90 million multiplied by what? 36. You have what? 12 million, right?
Yes.
So for you to know how many units you sell to get 12 million, what will you do?
Divide by
Add it to 100, by 300.
Fine, by 300. That is 12 million divided by what?
300.
Then you have what?
40,000 units.
So that is fine, right?
Yes.
Yes.
And it's same result with what you've derived.
Yes.
Fine.
Yes.
Sorry, sir, I didn't get that.
All right, let me change my screen. Let's show the workings now.
Okay.
Yes. Let's show the workings now so that so you all have the question. I don't have the question on this slide. So what we've done at first, we'll show it in two ways. Yes. Let's just show the simple way first. Break-even point in units. The formula is what? Fixed costs.
Total
Cost
fixed
of
cost
contribution.
divided by
I want to show the
Cost divided by contribution in unit.
divide by contribution or contribution margin. So now from the question, we've agreed that our fixed cost is what?
12 million.
Yeah.
The overall contribution is what?
30 million.
30 million. You know, this 30 million we are using is joining both common bags and what? And
Executive.
Bag.
You can do it individually if you want. So when you do this, the result will be what?
0.4.
0.4. Fine. So this is the overall break-even point. So for common bag, what will be the break-even point? This is for common bag. The break-even point will be what? This is the ratio now. For common bag, it will be 0.4 multiplied by how many units do you have for common bag?
300 units.
300 units, right?
Yes, sir.
300 units. When you multiply this, you have what?
120,000.
120,000. 120,000. For executive bag, it will be what? For executive bag, it will be what?
40,000.
0.4.
You know, there was a conversation we had with Timo.
Multiply by what?
When you raised concern about
100,000.
100,000.
So we have it as what?
so 100,000. that is the
40,000.
for the other thing we had for okay, let me try and
40,000
40,000.
in units. This is the simple thing we'll solve. Yes, but let's go back to, let's now go. This is correct, please. This is correct. Yes. But now coming back to where we started from, the total contribution is equal to what? 30 million. The total revenue is what? From the question.
90 million.
90 million.
90 million. Now, since all these are in total, are in terms of sales total, they are not based on units. For you to get your break-even point, in terms of what? In terms of sales. In terms of sales, the formula is what? Your fixed cost divided by what? Contribution margin ratio. Now, to get your contribution margin ratio is equal to what? Contribution.
Over sales.
Contribution divided by what?
Over revenue.
Yes. Fine. To break it further, for you to get your contribution, it is sales
Minus variable.
variable cost. Variable cost. So divide by sales. Let us get it this way. Now, from this now, since we've established this, our contribution to sales from the question will be what? What is our contribution?
30 million.
30 million.
Our sales is what? Our sales is what?
90 million.
90. When you do this, you're going to have what?
0.333.
0.33.
So this is our contribution margin ratio. When you substitute this, your fixed cost is what? 12 million. 12 million divided by what? 0.3333. You have what?
36,363.
Approximately 36 million. So this is your break-even point in sales. So we now went for that. This break-even point here, it combines what? Common bag and what? Executive bag. So what is the portion of common bag in this 36 million? It said common bag. Common bag is equal to what? Since we are working based on total, the total related to sales bag, that is the ratio, 60 million divided by what? 90 million multiplied by what?
360 million. 36 million.
Million. 24 million. So this is in terms of sales. In terms of sales. So how many common bags will I sell to give me 24 million? To give me the break-even point in unit. Yes. How many common bags will I sell to get 24 million? How much is one common bag? How much are we selling one common bag?
200 naira.
So it will be 24 million divided by what? 200. to give me the unit I'm to sell to make 24 million. And that would be what?
120,000
120,000 units.
units.
So if this is what I have as my break-even point in unit, without understanding this value, without having this value, and the question is telling you, units, what is the break-even point in sales? It's just for you to multiply 120 by the selling price given in the question. Then you get your break-even point in sales. Hence, you don't need to go through the formula. This formula we have at first, the formula we showed at first, where we are saying that yes, fixed cost divided by contribution margin. You just be fixed cost divided by contribution. Then you multiply that contribution, that break-even point in units, by your selling price. So this is for common bag. For executive bag, it will be what? For executive bag, it will be what? It will be what? 30 million.
30 million.
Divided by what? 90.
90 million.
Multiply by what? 36.
36.
And the result will be what?
12 million.
12 million.
With 12 million. So if this is my break-even point in sales, how much am I selling one common bag?
300.
100.
So
Okay.
how many executive bag will I sell to get 12 million? I'll divide 12 million by 3. And that will be what?
40,000 units.
40,000 units. 40,000 units. So if I'm looking at the question again, I'm seeing another way where how I can solve it again. Yes, without going through this approach, I'm seeing it again from the question. I'm seeing it from the question. If you look at the question, you can try that on your own. Let me change my slide to the question. If you look at the question, instead of what if you look at the question, instead of working, okay, fine. Instead of working based on this total, you can see my unit, 200 minus 140. I'll get contribution, right? 200 minus 140, I'll get contribution per unit.
Yes.
300 minus 180, I'll get what?
Contribution per unit.
Per unit. So let's see that again. So
140.
okay. So the point is, we won't be able to solve them individually because they have what? Joint fixed cost. Joint fixed cost. I don't know if you get that. They have joint fixed cost. If common bag is having its own fixed cost, then you just solve them separately. But there is something tying them together, which is the fixed cost. And that is why you always have to solve to get in total. Then you now split. You now split it into their ratios. And that is why this solution is like this. And that is why even in the simple one we show, this one here, this value is combining both common bag and what? An executive bag. So you must multiply this value by the common bags, multiply this value by what? The executive bag, to get the break-even point in unit for each of them. But overall, the break-even point in total is what? The break-even point in total. Okay, I'm showing something else. The break-even point in total will give you what? 120 plus what? Plus 40.
40,000.
160.
160.
160.
Sorry, sir.
160,000.
Sorry, sir. The answer for the executive bag should be 40,000, not 40 million units.
Yes, 40,000 units. 40,000 units. 40,000 units. So this is coming this way because there is a joint fixed cost for both. Madam Merit.
Sam, with you.
I don't know. Is this clear?
Yes, it's clear, sir.
So looking at the deep part of this question, everybody should be able to solve it. Let's see now.
No, no, sure.
Determine the break-even point in units. Determine the break-even point in units. See the statement in units. If only now, not both now. If only common bags are sold, and if only the executive bags are sold. So, what is the break-even point in units? If only yes, a very simple working, very fast, sharp. If only now, we are not seeing executive bag and common bag as being jointly produced, but individually, separately. Common bag does not know executive bag. Executive bag does not know common bag. So we are assuming first, you solve first for common bag. So what will be the result?
We look for the ratio.
That's determine the break-even point in units. The first is you ask yourself, what is the formula for break-even point in units?
Total fixed cost all over contribution margin per unit.
So the total fixed cost is what?
12 million.
So for
12
common
million.
bag, just for common bag, what is the contribution for common bag?
18 million.
60 naira, yes,
18
multiplied by
million.
300,000. That's it.
18 million.
Now, no, let's come back to this question. The break-even point in units. Let me take you somewhere else in the question again. Look at this. Revenue at 200 naira and 300 naira per unit. Variable cost at 140 and 180 per unit. So the contribution per unit will be what for common bag?
That's 60.
60 naira.
Fine.
60 minus 42. That's 18.
For common bag, it will be
200
200 minus 140. For executive bag, it will be 300 minus what? 180. That will be the contribution for each separately. So now, if that is the case,
120 naira is for executive bag.
yes, 120 naira. So determine the break-even point in units if only common bags are sold. So if only common bags are sold, if fixed cost is 12 million, your contribution for common bag is what? Contribution for common bag.
18 million.
See it now.
60.
18 million.
60.
per unit.
60 naira.
60
60
naira.
naira.
60 naira. So 12 million divided by 60 naira, you get your answer, and they mark you right, and you move
200 units.
200 units.
Hello, sir.
Sir,
I'm with you, sir. I'm with you,
sorry,
sir.
sir.
But in that part, no, question A
Even if we
says
use
calculate break even in units.
Yes. That is why I said,
the
see,
contribution
see it, sir.
value.
See it.
Hello,
I
sir. Can you hear
No,
emphasize.
me?
A part A.
Okay.
Question A says calculate break even in units, and we used that 12 million to divide 30 million to get 0.4 based on the other simpler solution that myself adopted. 12 million divided by 30 million to get 0.4. I will use it to times 300. In this place, I used 12 million to divide that contribution, 18 million. Why using that 200?
Sir, this is the question. Just follow the question. In part A, they said calculate the break-even point in units, assuming
units, yeah,
that the planned revenue, that is why we work based on total revenue mix. That is the proportion, the ratio mix means the ratio of common bags and what executive bag.
Okay.
Revenue mix. Now, in part B, they are now telling us that determine the break-even point in unit if, underline the word, if only common bags are sold. Now, we are not looking at the fact that there's a relationship between common bags and executive bag. If only, independently. If only common bags are sold. So if only common bags are sold now, assume we are not seeing executive bag. What is the contribution per unit for common bag?
Yeah, that's 200 minus 140.
Fine. 200 minus 140. That is the contribution unit.
Okay, so that total I used, that's 60 million minus 42. That is 18 million. Dividing it with 12 million. So it's not in line.
It's not in line.
Sorry.
Sorry, sir. I want to say something, please.
Yes.
Even if we use the contribution, the total contribution we had for common bag, we'll still have the same figure with the calculation we did. That's what I noticed now, because I did 12 divided by 18 million, 12 million divided by 18 million, and I still had my 200,000 units.
Yeah, correct.
Yes. Yes. That is 12 million divided by 18, right? Yes, you'll be correct.
Yes. Yes.
You'll be correct. So, if you also go by saying that 200 naira minus what? 140, you have what? You have 60, right?
160, yes, please.
So, your fixed cost is what? 120? 12 million, rather. 12 million. So, 12 million divided by 60, you're going to have 200. So let's show the workings. Let's show it for some of us whose network. Pull us out. So for B, they are saying what? That's the break-even point in unit if only common bags are sold and if only executive bags are sold. So unit contribution. Unit contribution would be what for common bags?
Unit contribution would be
200 minus what? 140. You have what?
160.
You have 60. For executive bag, it will be what?
180.
300 less 180.
300 less 180. The result will be
120.
120. So the break-even point for common bag will be what? Our fixed cost is 12 million.
12
Divide by
million.
what? 60. Then you have it as what?
200,000.
200,000 units. For executive bag, the break-even point will be what?
12 million
12 million
divided by
divided by
120.
120. And you have what?
100,000 units.
100,000 units. 100,000 units. Who is not clear at this point?
I'm clear, sir.
All right. So it will be more clearer when you go back to it again.
All right, sir.
So let's go back to the question and see. Calculate the budgeted operating profit and break-even points. If 200 units are sold, but only 20,000 are executive bags. Who can interpret this statement? You sold 200 units, but just 20,000 out of what you sold are executive bag. What is the interpretation?
It means that the normal bag is 180 units, 180,000 units, while the balance is for executive bag.
Yes, it shows that the common bag is 180 and the executive bag is what?
80,000.
20,000.
Yes. So the question is saying calculate the budgeted operating profit. For you to calculate profit, what are the components?
No. Sales less variable costs. We have contribution less fixed cost. We have the profit.
Okay, fine. Fine. Okay. So now let's calculate the budgeted operating profits and break-even points if 200 units are sold out of. So let's show what to do here. So budgeted operating profit. So we have our common bag. And we have what? Our executive bag. So we can have our total. Now, that's how many units of executive bag do we have? 20, right? 20.
Executive 20, yes, sir.
And the total is what? 200.
200.
So 200 minus 20, you have what?
180.
So now, the selling price for common bag is what?
200 naira.
200 naira.
sales for common bag 200 multiplied by 180. You have a
46
total sales of
million.
what?
36
million.
36 million. For this, it will be what? 20 multiplied by what?
300.
200.
And the result will be what?
6 million.
6 million. Overall, the total will be what? 2 million.
42 million.
2 million.
What next are we going to have here? Since we are trying to determine our operating profit.
Variable cost.
Variable cost.
Our variable cost. Variable cost. Variable cost. The variable cost, when you produce 180, when you sell 180, the variable cost associated with common bag is what?
140.
140 multiplied by 140, and it will be equal to
25,200,000.
okay. 25 million
200,000.
200,000.
And for this 20,000, the variable cost associated with it is what?
180,000.
And the result will be what?
3,600,000.
600,000.
So in total,
$28,800,000.
8,800,000. So sales minus variable cost, you have what?
Contribution.
So for common bag, the contribution will be what?
$10,800,000.
10,800,000. And for executive bag, to be what?
2,400,000.
2,400,000.
2,400,000. The total will have it as
13,200,000.
13,200,000. And what else do we have?
Fixed cost.
The fixed cost is a joint fixed cost.
Okay.
Fixed costs. The value is what? 12 million.
12 million.
So contribution less fixed cost, you have what?
1.2
million.
And that will be your profits. 1,200,000. 200,000. So the question is saying that what? That calculate the budgeted operating profit and break-even point if 200 units are sold. 200,000 units are sold, but only 20 are executive bag. So what will be our break-even point? What will be the break-even point?
The total fixed cost, and our total fixed cost is 12 million divided by contribution per unit
Our break-even point will be what? Break-even point in sales.
Okay, it will be in total, right?
Break-even point.
200 units.
Go and carry your books in the sitting room.
So now the break-even point in sales will be what? The formula is what? Fixed cost.
Contribution margin.
Fixed cost divided by what?
Contribution.
Margin ratio.
So your contribution margin ratio will be what? On what will solve? Contribution margin ratio in total. Contribution is what? 13.2. 13,200,000. Our sales is what?
0.3. Sales is 42.
42.
42 million.
So the ratio will now be what?
0.314.
0.314.
0.314. 0.314. So now the break-even point in sales will now be what?
$38,216. 560. Okay, 38
million.
217.
38 million 216 560.
38 million
216,000 560.
561. Like approximately 561.
561. So this is the break-even point in sales. The break-even point in sales. Somebody is breathing hard.
Yes, sir.
You don't need to. Oh, you don't need to breathe hard. So now, based on this value what would be based on this result? This is 38,216,561, right?
Yes.
38,165. So this is the break-even point. Break-even point in sales. So now the point is this: if you want to now get the proportion for executive and common bag, what will you do? The proportion for executive and common bag, what will you do?
We say 180 divided by 200 times this amount.
Yes, that's it.
20,000 times 200 divided by 200 times this amount we get for executive.
The cells we have here, looking at these workings, common bag, what is your cells?
Is 36 million.
6 million.
36. So what is the ratio in terms of the break-even in sales?
0.85.
Okay.
857.
0.857.
Yes.
We're trying to go by what we've done before. So when you multiply it, 0.857, what will be the value, the unit value now?
So let me see the second. The value for common bag now is 32,757,052.
When you divide that by the selling price, you have what?
I have 16,300 okay, 163,785.
785. Okay. So this is what we are doing, for in case you are not getting what we're doing. So this is it. You know, in the first instance, when we are solving for A, the break-even sales, for us to get the portion of common bag, what is the sales for common bag? 36 million. Divide by this, multiply by what? This overall break-even, isn't it? Then we divide the result by the selling price to know the unit. So for common bag, it will be equal to what? 36 million divided by 42. Multiply by what? 38,216. 561. The result will be what?
163,785. 163, 163. No. It's at 163,785.
Okay, 463,
163, 163.
163.
No, you take everything, delete everything.
Hmm.
Yes, 163, 785.
785. So when you divide this by the price of common bag, you have what?
Oh no, this is divided by the bag of common bag. Wait, let me give you back.
Okay.
32
Okay,
million.
you've done
Now it's
that already.
32 million.
Yes,
Yes, this is 32 million.
32
32 million,
32 million.
757.
757,052.
Okay, okay. So this is 32 million
757
757
052.
052. So for the other one, executive bag, it will be what? For executive bag, it will be 6
So the
million
6 million divided by 42.
and we have it as what?
Have it at 5,459,508.
Divide this by what? 300. You have it as what? 18,198. 18,198.36.
18,198, yes, 0.36.
Oh, this is what that question wants you to do. The question test candidates' knowledge of break-even analysis for decision making involving single and multi-products. Yes, in the first instance, in the part A, it was a multi-product computation. In part B, is what? Just a single product computation. And it used marginal costing techniques in determining budgeting operating profit, break even in units and in value. So going through the examiner's comments, that about 85% of the candidates attempted this question, but performance was what? Was poor, with over 70% obtaining less than half of the allocated marks. What was their problem then?
To understand the requirements of the question.
Their inability to understand the requirements of the question regarding the stated revenue miss was a major pitfall. So they are now advising us now that want to write. Candidates are advised to ensure adequate understanding of the requirements of questions before preferring solutions. So to do ourselves good, even after this class, go back to it again. Give yourself an examination condition and attempt this question. The question is comprehensive, yes, because it's testing your knowledge on single situation of break even and multi situation, yes, of break even, where you have a multiple product. And you can still go back to our class, our normal class video, where we solve a question on beans and flour. Yes. And there was a video, there's also another question we treated in last diet revision section that involves something like this likewise. So after the class, take your time, go through it again and try to see how you can solve it much more better, with better understanding. Interpret it to yourself. Yes. And you'll be fine. So any question, please? We still have a question to solve. We are not going yet, so don't be tired. I forwarded 2 questions, right? So we are still going to solve the other one. So we have to pass. There is no story. There is no coming back to write this paper again. So we have to do anything we can do. It's not easy. It's not easy. There is no story about that. But we just have to keep pressing. Yes. And we'll definitely get it. So that is why I see some ACAs, they're always raising their shoulders up as if, but the fact that I can pass it, you can pass it. Yes, that there is no any special something. My own belief is that everybody is intelligent. That is my own belief. It's just because the student that the teacher is saying that is dull, the teacher have not discovered a way to pass the message to that student. So there is no any dull students. For those that have passed through education line, I know there is a course they used to do. They will tell them maybe psychology of a child. So that is my belief also, that everybody is intelligent. It's just trying to understand everybody's approach and psychology to understand issues. So who is having the other question? You can read. Let me locate it. Which year is that question? Question. Okay. Let me find it. If you have the question, you can read. Yes, question number 1, 217. This is it. So somebody should read. Okay, sorry, I'm not showing it. So can you see it? This is the question. So somebody should read. This will not take our time. Don't worry. It's very simple. There is no any drama about it.
Let me read.
All right.
Cades Industries Nigeria Limited is a subsidiary of a large manufacturing company based in China. Cades International. The company manufactures washing machine, table gas, cooker, and refrigerator, which are being sold by the subsidiary in Nigeria. Demand for the company's products is growing, especially among the growing middle class population until recent, when the company started experiencing some hiccups as a result of the economic recession in the country and stiff competition. The company is currently selling only 2 products in Nigeria. Both are types of washing machine. These are a basic product, wash up, with function which are comparable with the existing local competitors' products, and a premium product, Perfect Wash, which has functions and fixtures similar to Cades products in developed countries. The competitive environment in Nigeria is changing rapidly. Apart from Cades, two other companies are offering similar machines in the market. One of these has a factory in Nigeria and is producing machines similar to Wash Up to compete directly with Cades. The government of Nigeria has supported this new entrant with tax holiday, as its product has been approved as a pioneer product. The other competitor is now considering building a manufacturing plant in Nigeria to produce more highly specialized washing machine similar to Cades Perfect Wash. Cades International stated mission is to be the leader in the industry. The board of Cades has set the following critical success factor for Cades Nigeria subsidiary: to be the market leader, to maximize profits and shareholders' wealth within acceptable risk, and to maintain the brand image of Cades as top of. I can't see your screen again. Hello.
Yes, sorry about that. I was touching my system and sorry, just 1 minute.
Okay, sir.
I don't know what is happening. Can you see it now?
Yes, sir. It has left again.
Wow. Okay. All right.
Okay. The board is considering using the following key performance indicators for each product: total profit, average sales price per unit, contribution per unit, market share, margin of safety, return on capital employed, and total quality cost. You have just been employed by Cades as its performance management controller, and the board of Cades International has requested that you provide calculations key performance indicators which we address issue in the external environment in Nigeria. The data given in Appendix 1 below has been collected for your use. Appendix 1, Nigeria subsidiary information for the most recent financial year. Variable costs, we have Wash Up and Perfect Wash. Variable cost per unit, we have material, we have labor, we have overhead, distribution costs, and quality costs. Then we have fixed costs. Under fixed costs, we have administrative costs, distribution costs, quality costs, marketing costs. Then we have other costs, revenue, and capital employed. Then total market size, and Cades says million. We have units. We have 2 units each. Note: the allocation of fixed costs are based on a recent activities-based costing exercise and are considered to be valid. Required: A. Provide calculation which show the key performance indicator suggested by the board for the performance assessment of Cades Industry Nigeria Limited. B. Use pest analysis to identify issues in the company's external environment, and then comment on whether the suggested key performance indicators address these issues. 30 marks.
All right. Thank you very much. And when you see this question, you discover that it's not something complex, right?
It's complex. So.
Say God.
It's complex.
This is complex because it's number 1 question. It's not complex.
No, the question is straightforward though.
You see now.
The issue is this. It's hard to calculate the performance indicator now.
The question has given you the performance indicators to calculate.
Oh.
Yes, let's go back there. Let me show you. They've given
Okay,
you
I think
what.
you say capital employed,
See
return
it
on
here.
capital employed, margin of safety.
Yes, exactly.
Okay, market share, contribution per unit.
So is it difficult?
I beg.
Where is it? Yeah.
They're there already.
Okay.
You passed it.
Yes, this is it. The board is considering using the following performance indicators for each product. It means what? How many products do we have? Wash up and perfect wash, isn't it? Now,
Yes, sir.
for you to calculate total profit, what do you need? What do you need? They've given you these variables as a performance manager. They've given you these variables. In these variables, what do you have? You have variable cost. Take note, wash up per unit, perfect wash per unit, variable cost. It means these costs are per what? Unit. Now we have fixed cost. Fixed cost is not having per. Do you see it? It means it's in total. You must be able to see that. Now, other data, revenue. This is your sales, right?
Yes, sir.
Your capital employed, you see it. Now, they're not giving you total market size in millions. This is unit in millions. Unit in millions. Unit in millions, not per, not one. This is carded sales in millions overall. This is it. Carded sales in million. But this carded sales in million is the sales in units in million, not in value, not in naira value. Carded sales, Carded is selling 1.12 units in millions in terms of wash up and 0.44 million in terms of what? Perfect wash. So now the question is this: if you want to calculate profit as a performance indicator for both products, what will you do? What are the components of computing profit? Answer it. Speak to it. What do you need to calculate profit to get your profit?
It's revenue.
Minus cost, total cost.
Fine.
Revenue less cost.
Yes, and you've passed. Give you 2 marks. Say it hard.
Don't make me laugh.
I give you 2 marks. And you keep accumulating those 2 marks, 3 marks, 5 marks, till it crosses 50. And you go and keep the money in your church.
Big testimony.
Madam Afiniki said she has put down her testimony already.
And special number.
So it's not something difficult. So as you've said, to determine your profit, your revenue for workshop is what? From the question, revenue for workshop is what?
44,800.
Fine, you write it out. Calculation of performance indicators. Number 1, profit. Workshop, perfect wash. Revenue for workshop is what? 44,800. For perfect wash is what? 30,800. Now, what is the variable cost for workshop? What is the variable cost for workshop?
We have direct material, we have labor, we have variable
overhead, distribution costs, and quality costs.
So when you add all those things, it will amount to what?
This
variable cost.
Variable cost is in per unit.
Very well. Yes.
What did I want to do?
So when you add everything for workshop, what will you get? Then we'll now take it further.
25,500.
25.
500.
Fine. How many units do we have for workshop?
1.2.
1.12. Multiply that by 1.12.
28,560.
8,560.
Fine. You have variable costs for the whole product. Then your fixed cost is what?
I went out and just came in.
Fixed costs, we have administrative costs, distribution costs, quality costs, market costs.
Marketing cost.
So when you add all those things to give you what?
12,000.
12,000. So your revenue minus variable cost minus fixed cost will give you what? Profits. So for wash up, you get what?
4,240.
And for perfect wash, you have what? For perfect wash, your revenue will be 30,800. Your variable cost, when you add up everything here, multiply by the sales 0.44, you should have what? 14,400. You should have 14,400. Then your fixed cost is still constant, but for perfect wash, still 12,000. 12,000. So 30,800 minus 14,400 minus 12,000, you have what?
26,300.
26,300. 26,300. Can you confirm again? 30,800 minus 14,400 minus 12,000.
4,500. Sorry, 4,500.
4,500. Right. So that is the profit. Have you passed through any stress in getting that?
No, sir.
No. No.
Sir, please, can they repeat this question?
Amen.
Who will you know?
20 marks, so if we get the number one.
That is not all. Oh. You are still going. So the next key performance indicator we have to derive is what? The next key performance indicator is what? Average sales.
Average sales
Per
price
unit.
per unit.
Average sales price
Per
per
unit.
unit. Average sales price per unit. Now, how do you determine that?
Sales
Average-
divided by 2. Average sales. We add both sales and divide it by 2. Am I correct, sir? Average sales.
No, we are still looking at each of the products. They are independent.
Okay.
Workshop is on its own. Perfect wash is on its own. So the point is this: what is your total sales for workshop?
44,800.
44,800. That average sales per unit.
Unit.
How many units do you have for workshop? 1.12.
1.12.
See, it's 1.12. So that sales, that your revenue, divide it by the unit. You have the average sales per unit.
40,000.
40,000.
That is for workshop. For perfect wash, it is what? 30,800 divided by what? 0.44.
70,000.
70,000. So that is what your average sales per unit. Your average sales per unit. It means as you keep selling over time, what is the average of your sales? Average of your sales. So it is your sales price, or it is your sales in units divided by the total sales. This is the total sales: 44,800 for workshop, 30,800 for what? For perfect wash. So what is the average? The average will be what? The total sales divided by the total units. You have the average sales per unit. Is this clear?
Yes, sir.
Yes, sir.
You see, it's not difficult. You have another 2 marks. What is the next thing they ask us to do? The point is your ability to detect this point, this region, this highlighted point.
Contribution per unit.
Contribution per unit.
Contribution per unit is the next thing. Do we need any story about this again?
No, sir.
Yeah, so and give me the answer. Let me know. Take note of contribution per unit. So something is happening here. We just derived what now? Sales per unit, isn't it? Average sales price per
Via
unit.
total contribution divided by our units.
Selling price minus variable cost.
Okay.
I mean, sales price per unit minus variable cost per unit.
Yes.
Okay.
Yeah, I think we just got the sales per unit now.
Very good. Yes. So you can see the sequence. So for workshop, the sales per unit is what? 40,000.
40,000.
11,440.
11,440.
Yes, sir.
14,500.
14,500. Okay. Who is getting 14,500 again? Who is getting 14,500?
14,500.
14,500. In the question, when you go to the
I've
question,
gotten it. 14,500.
okay, fine, good. That is for workshop. Then for perfect wash is what? For perfect wash is what? Mr. Udu, hope you are writing.
Yeah, I'm here.
You know, this is revision class. I just don't want to be showing the working. It's good you brainstorm. So that is why I don't want to be doing solving, and let's brainstorm together.
37,500.
So 37,500 for perfect wash. For perfect wash. Who is not getting 37,500? If your sales per unit for perfect wash is 70,000 and your variable cost per unit, when you add those variable costs for perfect wash, you have 32,500. 70 minus 32,500, you have contribution per unit to be what?
37,500.
500. So is this difficult?
It's so cheap.
See now. So the next is what? The next KPI.
Market share.
Market share. How many of you have studied these aspects of the syllabus? KPI, these are non-financial performance indicator, where you have PESTEL, you have SWOT analysis.
We study it in CSME.
CSME now. CSME.
It's also in performance management.
Okay.
If you have studied it and if you have solved past question very well, there is a question in the past question that was lifted from that region. The question on where they are testing your understanding on bull, dog, star,
Yes.
cash cow, and the rest. So in that question, they were trying to test your understanding on market share. Yes. So that understanding is also very key. And that is where the issue of PESTEL is coming again. The issue of unsolved grid matrix is coming. Yes. All those parameters of measuring performance. So when you talk about market share, this is one of the most important key performance indicator used to measure a company's competitive position within its industries among its competitors. Talking about Picnic and 3 Crown. If you want to look at their market share, which is well known over time, you discover that without any iota of bias, you discover that over time, Picnic have a large proportion of the market because it is much well known over time, and I think till present. So it shows that, but for you to measure it, you measure it in values, in figures. I'm just trying to do a fictitious assumption. So market share shows how much of a total market sales or demand a company's control compared to its competitors. So market share is a percentage of total sales in a market that is captured by a particular company. It can be product, it can be brand, over a specific period of time. So what market share does is that it reflects an organization's strength, competitiveness, and also it reflects customers' preference in relation to its product in that particular industry. Now, to some of the products you buy in the market, for those of you that are females that visit the market frequently, you know certain products in a particular line of goods. For example, some people prefer the Star Maggi to the non-Maggi. Some people prefer, you know the brands now, or people like us, we only know two. We only know Star and No. I think there is Reiko too. And there is one that has one fish. Is it fish something? So when you go to the market, as a customer, you have your own preference. That is what you like. Yes. So, but the more customer like a particular product, the more market share they will have. The more market share they will have. So, in relation to this now, in relation to this question, how will you measure the market share of Wash-Up and Perfect Wash? We have the sales in units, right?
Yes.
And we have the market size in units. We have the sales in units, and we have the market size in units. This is it. This is it. This is the market size. This is it for Wash-Up. And for Cades, what is the proportion of this that Cades is selling in the market? The markets, you can sell 9.33. and Cades is selling 1.12. So what is the market share of Cades in 9.33? So how are you going to get that now? I said is the percentage of total sales in the market, right?
Yes, sir.
Yes.
Cades in relation to the market share will be what? The formula is sales in units divided by market size in units multiplied by 100.
12%.
12%, yes, for wash shop. And for perfect wash, it is what?
%33.
33%. Any
Hello, sir.
stress? Yes, ma'am.
I'm not getting the 12%.
You multiply the result by 100. 1.12
Yes.
divided by 9.33 multiplied by 100. I'm getting 0.12 multiplied by 100 to be 12%.
Okay, sir. Thank you, sir.
So, any stress in getting this?
No, sir.
It's very simple now.
Because
It's very simple. After the class, go back again and assume you've not seen it before. Then try and solve it again. Yes. So solve it.
It's easier than the first one we solved.
Even that first one is very easy now.
No, that first one carry weight.
It carries weight because maybe that is the first time you are approaching it. So go back to it, solve it 2 times. You discover it's just a child's play. Yes.
Okay.
No, that is one of the approach. While I was solving, if I'm solving questions, I make sure I solve it over and over again. So it will be very much more easier. So when you even see similar thing in the exam, you won't take time. It will not, you will just walk over it and sharp, you are through. You're already praising God before you stand up.
For performance management.
Very well, ma'am.
By God's grace.
Very well.
Amen.
Yes, just solve and solve. You'll be very fine. There's no story. So the next thing is this. Let's look at the next thing. What is the next performance indicator?
Safety of margin. Margin of safety.
Margin of safety. Can see it again, showing. They put different things together in this question as a measure of performance. So it's testing your understanding in different aspects of the topics. So in this case, to get our margin of safety, it will be what? And for you to get your margin of safety, there is something you need to determine. What is that thing?
Break even.
Very good. Break even. Break even. The question will now be, is it break even in units or break even in sales?
Yes.
Okay, fine. In sales. Good. So your sales in unit is what? From what you saw.
For what shop it's 40.
Says in unit 1.12.
Very good. 1.12. And for perfect wash is what?
0.44.
So what will be your break-even sales in units? Your break-even sales in units. You know your fixed cost. What is your fixed cost?
12,000.
Your fixed cost is what?
12,000.
Fine. So what is your contribution? Your contribution is what?
14.5.
45.
Very good. 14.5 for 14.5 for workshop. So when you do the division, 12,000 divided by 14.5, you have what?
Zero 0.82. Approximated 0.83.
0.83. Fine. 0.83. So break even or margin of safety is what? Is your actual sales less sales at break even point. Actual sales less sales at break even point. So your sales at break even point is what? 0.83.
83.
Your actual sales is what? 1.12.
It's 1.
So 1.12 minus what? 0.83.
0.29.
0.29. 0.29. Who is not getting it?
Please,
So
can
I'm
you
not
come again?
getting it.
Yeah, let's go and show it in this. Let's go and solve it. I know this aspect needs you need to show it. Margin of safety. So I earlier said that this margin of safety, what it does is that it measures how much actual or expected sales can fall before the business reaches its break-even point. So that it is the difference between your actual sales and break-even sales. So for this question, we have workshop and we have perfect wash. Workshop and perfect wash. Now, the sales in units for workshop is what?
1.12.
1.12. For perfect wash is what?
0.44.
So your break-even sales in units will be what? Let me just show it here. Break-even sales in units. If your fixed cost is 12,000, what is your contribution? Sales minus variable cost. Your sales is what?
40,000.
Your sales minus variable cost. You said 40,000?
Yes, sir.
So 40,000 minus your variable cost will give you what?
14,500.
Fine. 14,500. You know, we've derived our sales price per unit before as 40,000. How did we get that? We said 44,800 divided by what? 1.12. So we derive our sales price per unit. So the contribution will be 14,500. So when you divide your fixed cost by contribution, you have what?
0.83.
So that is your break-even point in units for workshop. Now for perfect wash, it will be what? 12,000 divided by what?
That's 75.
divided by 37.5. 37.5. So we have it as what? So somebody will ask, how did you get 37.5? Your sales per unit is 70,000 from our previous workings. Your variable cost is what? 32,500 for perfect wash. So when you say sales minus variable cost, 70 minus 32,500, you have 37,500, which is your contribution. So fixed cost divided by contribution, you have 12,000 divided by 37,500. The result will be what?
0.32.
0.32. Hope this is clear. So let me delete all these. So now your margin of safety in units will be what?
0.29.
Will be sales in units actual minus break even. This will be what?
0.29.
And this will be what? 0.44 minus 0.32.
0.12.
0.12. Now, if you want to get this in monetary value, in money value now, what will you do?
Multiply by the units.
You know, all these are in unit already. So if you want to now convert all these to monetary value, what is the sales price per unit?
$40.
The sales
40,000, and for this is what? 70,000. So the margin of safety in money value will be what? For what shop?
11.6.
It will be what? This will be 40 multiplied by what? 0.29. You have what?
11,600.
11,600.
And this will be what? 70.
8,400.
Margin of safety. You are not clear about how we derive any figure. You can speak out. So, is this clear?
Yes, sir.
The next issue of performance indicator is what?
Return on capital employed.
Fine. Return on capital employed. So the question is, what is the formula for return on capital employed?
Revenue over capital employed. No.
Revenue over capital employed. So everybody is in agreement with that.
Profit over capital employed.
So, Madam Ruth, you don't want to speak out.
Profit over capital
I said
employed.
profit over capital employed.
Yes, profit over capital employed. I know people like Madam Ruth, there are people like us. They'll be talking small. What we can actually talk anyway if we want to talk. All right. So when we talk about return on capital employed, who can explain what that concept is all about so that you will not just oppose the formula again? Return on capital employed. Who can you explain? I'm your student now. Explain to me.
the capital you use to start the profit. The capital we use to start the business. The profit we are getting now. I don't know how to put it, Mr. Tope.
Return on your
Return
investment.
on capital. Yes, return on investment.
Okay, you know, very soon now, some of you will come and be teaching. So as you are learning how to teach too.
That teaching is not easier.
So return on capital employed is how much profit a company earns or a company earns for every of its investments. Now you've invested 1 million to buy a machine. As you've invested that 1 million, how much has your profit increased as a result of the introduction of that new machine? So the return the machine is bringing in is a return on capital employed. So return on capital employed is one of the key profitability and efficiency ratio that measures how effectively a business uses its capital to generate profit. So it is operating profits or net profits divided by what? Capital employed. And what is operating profit? Let's take it further. What is operating profit?
Profit before tax.
Very good. Yes. Profit before interest and tax. Profit before interest and tax. So because of time, so that I will not keep us too much, because some people are not in this class, they are attending wedding. It's you know, in this period now, even village meeting, you will tell them you are not coming. Madam Nogu, okay, I'm not planning to go for meeting tomorrow.
Oh, one day.
So, I don't go anything out now. Everything cancel. I don't go anywhere.
No, that is the password.
Indoor.
That is the password to
pass
pass
this. I will go to work and come back. I love though.
No, you need to go to work, but you need to make money. Because you know all those activities, they are constant, they'll always be there. But this exam, it has a timeline. We need to forget it.
Just November 22, I did 20 something. We can now flex. Sleep.
You see now. So now the next thing is our return on capital employed. Now in this question, what is our profit? We've determined our profit before now. When we started our discussion, that our profit is revenue less our cost, right?
Yes,
the revenue is for car wash, for workshop is 44,800. The variable cost 28,560, fixed cost 12,000. So 44,800 less 28,560 less 12,000. You have what? A profit of what? 4,240. You have a profit of what? 4,240. That is for workshop. For perfect wash, the profit will derive as what?
4,500.
4,500. Good. In this question, are we giving capital employed?
Yes, sir.
Fine. In this question, see, capital employed, free of charge. You don't need to go and be stressing yourself. 32,600 for workshop and what? Perfect wash, 25,000. So based on this, apply this in the formula. What is the return on capital employed for workshop? You know, the formula is operating profit divided by capital employed multiplied by 100. So for workshop is what? For workshop is what?
%.
Okay, 13%. And for perfect wash is what?
18%.
18%. Is this difficult? No.
Yeah.
You see now? Yeah, that is the spirit. That the mindset you must have is that nothing is difficult. That should be your watchword. Nothing is difficult.
Nothing is difficult.
Yes. So you must go in that mind that nothing is difficult. No matter what it is, you will solve it. So the next thing is what? From the question.
Total quality cost.
Total quality cost. So who can tell me what we are to do here? If you look at the question, you see some things like quality cost, quality, isn't it?
Yes, sir.
You just go there and pick it. Total quality cost. See the English. Total quality cost. So go and pick all the issue of quality in variable, in fixed, and add them together. And you get your results. But there is a technicality somewhere. I want to know if somebody will get that technicality. So let me just ask the question. So what is the total quality cost for workshop? Let me know if somebody will get it. For workshop?
2,840.
2,840. Okay, fine. So how did you get your total variable cost?
2,000 times 1.12.
2,000 multiplied by 1.12. Fine. That is just the technicality there. If you don't know, you just go and pick what? You know, this variable cost is per unit. So you must pick quality cost of 1 unit multiplied by the total unit you have. Because fixed cost is on total already. So it will be 2,000 multiplied by 1.12 for variable, and you have what? 2,240. Then for quality, for fixed cost, the quality is what? 600. So 2,240 plus 600. You are going to have what?
2,840.
Very good. That is for workshop. Then for perfect wash, you're going to have what? 1,320 plus 600.
1,920.
1,920. You can see now. How many marks? 20 marks. Free of charge. 20 marks.
You can get 20.
Huh?
You can get 20 marks.
Very well. 20 marks. Free of charge. So the next thing in the question is what?
Pest analysis.
Use pest analysis to identify issues in the company's external environment and then comment on whether the suggested KPIs address this issue. So what is pest, first and foremost? You know, you people have more understanding in this aspect more than me. So tell me, what is pest?
PES is political, economic, social, and technology.
Yes. So PEST is an acronym for what? Political, economic, social, and technological. So now, when we talk about PEST analysis is a strategic management tool that is used to identify and evaluate the external macro environmental factors that can affect an organization in terms of its performance and in terms of its decision making. So why do we need to evaluate our performance with PEST? It helps a business to understand the broad, the uncontrollable forces outside their operations. So when a business identifies these forces, what are these forces? The issue of politics, war, tax issues, macro issues that are beyond your control. It will enable you to plan side by side so that you will not be pulled out of the market as a result of policies that are unfavorable to your business. So PEST, as I've said, is an acronym that categorizes external influences such as the political, the economic, the social, and technological factors. When we talk about political factors, what are those political factors that you will need to consider? What are those political factors you need to consider? Issues of government policy. Now, is tax a government policy?
Yes, sir.
Yes.
Is a government policy. So it is a factor that will affect this business. If you read the scenario of this question, you discover wider context issues in relation to the question. You can read, there is a part in the question that says the government of Nigeria has supported this new entrant with tax holiday. Yes, this is an incentive for businesses that want to come into such that CADES is operating into to set in. You can see the market share of CADES will reduce because more competitors are coming in. The government for others to come in. So these are policies that are beyond CADES control, and CADES will need to look for a way out to remain relevant in the market. So the issue of government policies, regulations, and political instability has to do with the P of PESTEL, that is the political. And when we talk about the E, the economic aspect, the issue of inflation, exchange rates, interest rates, and economic growth are issues that has to do with the economic factor of PESTEL. The economic factor, what is the age group PESTEL is selling to? Do we have more women in that market? You know, they might want to get this washing machine to reduce the manual tax they do in their various houses. So we have more proportion of children. You know, children can play very well. They can dirty their clothes. The more they dirty their clothes, the more their parents want to wash, and the more their parents think of getting washing machine. So what is the demography of the people in that particular environment? Also, a very important factor you need to write on. You can read more on this as it relates to that in the study pack. Okay. Yes, the lifestyle of the people, yes, and the consumer attitude towards this particular product are issues you need to write on. So once you just read and write about what you understand by PESTEL, analyze each of the word pest, P, E, S, and T in relation to the scenario that is given. Also, in terms of technological innovation, the products that CADES is into, what are the futures? People want to look at the futures. The washing machine. Do you just press? How well does the washing machine operate? What are the functions? All these issues. Is it automated? You have to stress yourself to do certain things in relation to the washing machine. These are issues that we need to consider in terms of these products. So when answering these aspects, anything theory, just relate it back to the scenario and you'll be fine. Let me see what the examiner is talking about, their reports. That this question tests candidate understanding of computation of key performance indicator as well as pest analysis. That about 80% of the candidates attempted the question, but however, about 30% of them understood the subject matter, and that was responsible for the poor performance. That, however, about 30% of them understood the subject matter, and that was responsible for the poor performance. So the common pitfall were their inability to compute break-even point, the contribution to sales ratio, and explain the meaning of pest analysis. You can see now. So they are now being advised. Candidates are encouraged to use their ICANN study test when preparing for future examination. So this is the examiner's comments. So overall, you can see that it's not that the question is difficult, but just take your time to read between the lines and come up with your workings. So you can do well to solve it again, and you'll be fine. So, any question?
Sir, please, will you drop the record as soon as we end the class?
It will take some time before it come up.
Okay, sir.
Once it come up, I'll drop it.
Thanks, sir.
Hello, sir. Please help me turn to your slide for margin of safety. Thank you.
Hello, sir. Hello, sir.
This voice is a new voice. This voice have not been in this class over time.
Yes, I'm with you, sir. But please, I want to ask this question, sir. The second solution that you just do, please,
Yes,
we really appreciate you, sir. And I want to ask, is it a workable something or unwritten? That pest you just explained, sir.
It's written, sir. Written. Just
Not
explain.
calculation matter.
No calculation. Pest. It's just tell them your stories.
Okay, sir. Thank you so much, sir.
Yes, sir.
Thank you, sir.
Hello, sir. Please, can you help me turn to your slide for margin of safety? Okay, thank you. I'm done.
There is one question on